Hey, everyone, and welcome back to the channel. Today, we're cutting through the hype surrounding one of the market's most controversial AI players, SoundHound AI, SOUN. Yes, this is the voice AI pioneer powering everything from your car to smart devices. But the latest quantitative analysis from the AlphaPilot model has uncovered a shocking truth. The stock's fair value is a mere $2.14 per share. That's right, we're looking at a potential downside of nearly 90% from the current market price. This isn't just a correction, it's a colossal mispricing. The core finding: valuation has detached from reality. Our deep dive report is unequivocal. SoundHound's current stock price is dramatically divorced from its fundamental metrics, its cash flow, its path to profitability, and its competitive standing. The major issues we've identified are crystal clear: a castle-in-the-sky valuation, AlphaPilot's proprietary probability-weighted discounted cash flow (PW-DCF) model adjusts future cash flow for risk. We ran the numbers, and even in our most optimistic bull case scenario, the value per share only reaches $5.92. The market is currently pricing this company far beyond any rational financial metric. This is pure, unadulterated speculation. The cash burn is relentless. Let's be blunt. SoundHound is still in the burn baby burn phase. R&D expenditure devours nearly 70% of its revenue. The company is nowhere near achieving positive free cash flow, and its immediate path to profitability remains murky at best. This is a perpetual funding machine, not a profitable business. The moat is a puddle. Their core competition? Only the biggest names in tech: Google, Amazon, and Microsoft. SoundHound is an independent startup in a high barrier to entry field. They lack the capital, the distribution, and the data scale to build a durable, long-term competitive advantage against these titans. The PW-DCF breakdown: quantifying the risk. We assigned 3 potential future scenarios to fully risk-adjust the valuation. Bear case: 25% probability growth stalls, or the company is simply crushed by the tech giants. Value: $0.37 per share. Base case: 55% probability secures a few large customer wins, but the road to profitability is long and arduous. Value: $1.57 per share. Bull case: 20% probability becomes a truly essential, independent platform in the market. Value: $5.92 per share. Summing these probability-weighted outcomes yields AlphaPilot's target price, $2.14. This is the risk-adjusted, reasonable price based purely on the company's future cash-generating ability. Even the absolute best-case scenario is a fraction of the current stock price. Hidden risk factors that Wall Street is ignoring: asymmetric competitive pressure. The big tech trap: giants like Google can offer voice AI as an add-on or a loss leader, using their capital and data to suffocate smaller, independent players. The auto industry barrier: penetrating the automotive sector's entrenched supply chain is notoriously difficult, making SoundHound's breakout a high-stakes gamble. Time and dilution are enemies. The conversion lag: contracts take years to translate into meaningful revenue, keeping the company under severe funding pressure. The equity drain: high reliance on stock-based compensation means constant share dilution, eroding the value of current shareholders with every paycheck. The AlphaPilot conclusion: SoundHound has great tech, no doubt, but it suffers from a thin competitive moat, massive cash consumption, and a distant profit horizon. Our analysis screams that the market is paying a premium for what might be the perfect AI dream, rather than what is, or even what is most likely to be. The risk far outweighs the potential reward here.
Now, to give you a clearer idea of how our valuation process actually works, let's take a look at the AlphaPilot valuation tool in action. This is the same tool we use for data analysis and value assessment in our reports, and it's what keeps our conclusions rigorous, consistent, and fully objective. We've always believed that transparency and advanced technology are the foundation of trust. So by showing you exactly how AlphaPilot operates, we hope you'll gain an even stronger sense of confidence in our analytical process.
For fundamental investors, this is a clear and undeniable sell signal. For current shareholders, monitor profitability, contract conversion rates, and the cash burn religiously. Any miss on these metrics could trigger a brutal correction. Rationality is the only compass in this market. Are you really willing to pay over 9 times the intrinsic value for the perfect AI dream? Drop your comments below. Is SoundHound the next NVIDIA? Or a guaranteed bubble ready to burst? Don't forget to like, subscribe, and hit that notification bell. We'll see you in the next analysis.